let's move our focus and look at the latest financial news driving the Nigerian fixed income space. And for that, we are joined by Bankole Odusanya. Bankole, it's great to have you on the show with us today. Let's start by taking a look at what happened in the trading today. Of course, following the 261 billion naira worth of maturities, we saw CBN's OMO auction yesterday. They sold 143 billion. We saw yields go up marginally in the secondary market. Now, many expected another OMO auction today to further mop up the liquidity in the system. So give us an update on the happenings in that space today.
Yeah, thank you. What happened actually was that the system was actually very illiquid as at this morning. That's after yesterday's OMO. Over 220 billion was sold of OMO bills, and then today we've seen a debit for the bonds auction of Wednesday. So the system will be in the repo if federal allocations do not come in by calculations. People are expecting federal allocations to come in this period of the month. What we noticed again was that interest rates in the money market went up seriously. I know that placements were done at 16 today, between 14 and 16. It's been steady at 10.25 levels, so you can see what has happened with this illiquidity. And with inflation going up, of course, the CBN would like to put more pressure on liquidity side to ensure that it doesn't get back to double digits, basically.
Now, as many analysts expected, the bond auction was oversubscribed. So talk through what happened at that auction.
Yeah, the bond auction was oversubscribed, but it seemed most participants quoted seriously high. Of course, you would expect bonds of long maturities like the ones that were issued to be higher than what treasury bills, short-term treasury bills are doing. We have treasury bills of 12 in the market, 12% and over at 182 days maturity. The 91-day maturities are like around 11.5. Yeah, and for the 1 year's maturity, the 360-something days maturity, T-bills are also at 11.5 levels. Basically, most investors are pricing these bonds at higher yields. Of course, the government had to stop for 2030 bond at over 12%. And at the last time it was issued, this particular bond stopped at like 10.9 levels. So we've seen the huge leap in yield, stop yield for the bonds. Basically, it showed that FDI slowed down. And one major reason is that the US dollar denominated securities globally are doing fine. Look at the stock exchange abroad and all the markets, S&P, Dow Jones, they're all doing very fine. And so most persons who have positions over there would rather keep. And people are taking profits over here, selling some of their positions. They are not rolling over those that matured from the treasury bills. And so you're seeing that basically it has affected even the value of the Naira against the USD.
I was just going to mention, as you said, the Naira, we saw strong demand for import payments yesterday, which added pressure to the Naira, and it lost 60 kobo. So give us an update on the Naira today.
Yes, between yesterday and today, Naira traded around 157.20, and then today it has ended at 158.30. That's around the Naira movement, the valuation. The suppliers waned a bit. We didn't see oil companies coming like they did last week, number one. Number two, the state of emergency could be a factor, could be playing a factor here. Most persons would like to go long on the dollar because when there's a state of emergency, there will be defense spending. And when there's defense spending, a lot of it will have to do with importation of this and that. Of course, we still even import fuel. So all that will go up also. So because our imports will tend to grow, it will affect the value of the Naira. People could be taking positions against this. Except if oil companies come in to take advantage of these high levels, we may see the Naira at these levels, 158 being the new low. Or yeah, we may not see 157 on the long run. I'm describing what will happen on the long run.
Okay,
Bankole.
Pressure
is there, and